Good morning. Como te libo? Ni hao ma. I'm on fire. Having a good morning? How you doing? Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis. Let me know how it can help. Just ask. So let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, it's a great idea to always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you. I've been doing this for quite some time. Before this, I didn't trade anything. So the only thing I've ever traded was Forex. Very interesting. Cool. So I didn't just fall into Forex. I climbed the mountain the hard way, really, because I'm self-taught, both technically and fundamentally. That was a long, slow, uphill journey, let me tell you. But what helped me survive was bringing a business sense to Forex. So I've always traded Forex like a business. And the core of any business is your business plan and your business strategy. So that's the secret to survival, I think. Measuring what you do to optimize your upside opportunities, but at the same time protecting yourself from risk. Got fluffy hair today. Fluffy hair. What's going on, Bubba? So I'm going to, I still to this day approach Forex that way, like a strategic business plan. So let me know how it can help. I will share what I can. I'm self-taught technically. I taught myself technical analysis simply because there wasn't books. And I also have to remind you, when I met with other professional investors, of course not in Forex, they laughed at me for two reasons. It was actually quite rude, but they laughed at me for two reasons. One, I was a Forex trader, and that was just stupid, and that was for idiots. And the second thing is I use technical analysis and market timing. And they're like, that's stupid. So that's how the world was when I first started trading Forex. And when I opened my first trading account, they didn't take credit cards. The minimum deposit was $5,000. You had to wire it. And that didn't get you any charts. So it's amazing how much easier it is to become a Forex trader now than then. Imagine you had to pay $150 to $250 a month just to get charts. And you're like, but I only have $250 in my account. Yeah, I know. So, right? But that means maybe it's too easy. Maybe it's too easy. Maybe you need to have a bigger challenge, right? And in this case, because it's easy, it's dangerous because you're like, I can just try it. Oh, I only lost $3,000. Who cares? Everybody loses in Forex. Everybody knows that. I'm no different. No big deal. And you move on. Whoa, whoa, whoa. You got to fight for it. You got to fight for it. Yeah, you got to fight for that success. You got to pick yourself up multiple times, dust off your shoulders, get that dirt off your shoulders, son. And stand strong and fight for this thing we call Forex. And if you're a survivor, then later learn how to thrive, guess what? It's well worth the effort. Forex is a beautiful thing. Now, really, if you look back when I was a venture capitalist, I looked at thousands of business plans and patents. And I've never seen any business opportunity ever that's even half as good as Forex. Because ultimately, think about it. There's unlimited upside. Oh, well, Wayne, I can only make $5 trillion a day. Well, that's kind of silly because that's the total volume. But imagine your addressable market has a cash flow, right? Buying and selling. So addressable market size of $5 or $6 trillion a day, and that you can set up shop somewhere inside that industry and try to make money. I'm like, dude, oh my God. So really what it comes down to is your consistency and your reliability in that marketplace. And the rest is just how much money you started with and how long you do this. Your lot size will grow. It's just a business. Like I said, it's just a business plan. So depends on how much you start with and how long you're a trader. And if you're growing your account 2% a month for every month for 20 years, dude, it's extremely good opportunity monetarily. But ultimately, it comes down to the lifestyle it offers you. So anyways, let me know how I can help you on that journey. Over the years, you've asked me for resources. Wayne, write a book. The link is in the description below. Wayne, can you do some training videos? The free training videos are linked in the description below. Well, Wayne, I want premium stuff. I want dozens and dozens and dozens and dozens of hours of hardcore college level or university level education on things like fundamental analysis and macroeconomics and central banking policy, but also technical analysis and trader psychology. The link to that is in the description below. But hey, it's going to cost you money. Yeah, it's going to cost you money. $88 a year. Okay. That's cheaper than Udemy or whatever you call those websites, right? At a site like that, you pay $100 for like 4 or 5 hours worth of training. How about less than $100 for 65 hours of training? Okay, so that's there. The link is in the description below. Hey, I like your chart templates, Wayne. The link to those in the description is in the description below. That's $5. Okay, one-time payment. And then, of course, you need a quality broker with fast execution speed, narrow spreads, huge swaps, but also built on a business model of ethics and a symbiotic relationship with their clients, meaning for the broker to truly be successful on the long run, they want and need their clients to be successful on the long run as well. See, I would say many brokers, maybe even most brokers, but I'll say many brokers, have a business model of advertise, advertise, advertise. So they're like, we're the cheapest, we're the cheapest, we're the cheapest. Then they attract clients to throw in $1,000, let's say, into an account. And then they're like, they consider their clients stupid, so they're like, they're going to blow up their account. So then they never put that money into the interbanking system because they know those clients are just going to lose that money. So really, they don't actually enter it into the interbanking system. They basically trade against the client. And then eventually that client, because they don't know what they're doing, blow up their trading account, and that $1,000 ends up going into the pocket of the broker. And that's the business model many, if not even most, foreign exchange brokers have set up. Isn't that interesting? You're like, really? Well, see, the cost of acquisition is so high to get a client, and especially one that'll actually deposit money. So they were like, yeah, let them blow up their account. We'll keep all that deposit money. Traders Way, instead, in my humble opinion, by the way that they've treated me and the way I've seen them act in the real world, they've proven to me that they want their clients to be successful traders, not because of an altruistic reason, because they love you, they care for you. Maybe they do. Maybe they don't. But the thing is, the business model is based on executing trades. Therefore, if their clients happen to trade successfully, they'll trade every day for years and years and years and years and years. And therefore, they earn a little bit from your transaction, right? They earn transaction fees. They're providing you a service, and they have to pay for liquidity advisors or providers. They have to pay for customer service. They have to pay for the licensing to the trading platform. And at the end, there's some money to pay their employees. And at the end, maybe the owner earns some profit. But you're like, dude, that's like an understandable business model. I understand that. I understand the business model. It makes sense. It's a symbiotic relationship. The better the clients do, the better the broker does. And to me, that's how Trader's Way has always presented itself. And of course, they like the fact that I'm providing education. Tradersway.com. Oh, and you get charts with your account. You get charts with your account. Remember my first one, you didn't even get charts. I had to pay $200 and something, maybe even $300. I can't remember the exact number. But I'll tell you the interesting thing about learning to trade that way. Remember, I was kind of saying like maybe it's a little too easy. Therefore, people come in and they just put in a half effort because everything is so easy. That could actually be a downside, right? Things are too easy, so therefore you don't have to try hard. Well, if you don't try hard, you ain't going to succeed. But the idea that I had to do some sort of analysis first before I even look at a chart. That's what I would do. Every day I would do analysis first, strategically, and then I would open a chart and set up the technical analysis. That's why my book is called Strategic and Tactical Forex Trading. I did strategy first, and then I did technical analysis to basically just set up the trades. Okay, so for example, here we are. We're looking at the Kiwi index, which I created. We created this trend days ago, near the beginning of the month. I set this, right? We set this up, and I said, well, that's interesting, right? Maybe we have a trend. And so what it did is it bottomed out, moved sideways. Now it's bottomed out and, retesting, but interesting, right? So imagine you did some sort of analysis like this first. Now, this is easy, once again, maybe too easy because it's just plotting it for you. I used to do this every morning. Actually, it was nighttime because it was Asia. So I'd trade from 10 o'clock at night to 10 o'clock in the morning when I first started as a full-time trader. And so I would sit down every time and I'd spend, it took about an hour, I believe, and I would take data, overnight volatility data, and I'd create currency indices on an Excel spreadsheet. So I'd do this on an Excel spreadsheet. Now, of course, I didn't plot it like this. I just did the math, and the math would say something like, let's say Kiwi and let's say Aussie. I'll just pick this. Are some of the weakest currencies, and some of the strongest currencies would be like USD and JPY and maybe Swissy is neutral or something. Okay, and I'd organize that by overnight volatility. And so what I'd get to is like, oh well, I should combine Aussie dollar and Aussie yen, and then I should combine Kiwi dollar and Kiwi yen. And basically and by the way, I did this math. So I would plot overnight volatility Kiwi versus everything. So I'd have to manually type everything into an Excel spreadsheet for Kiwi. And then I'd manually type in everything. So Aussie versus dollar, Aussie versus yen, Aussie versus Swissy, Aussie versus CAD, Aussie versus Aussie, which would always be neutral. So because it's itself, right? So anything with one, I would just cancel out. And then, Aussie versus just literally everything, right? And I do that for every currency versus every other currency to create that indice. And I'd find myself, okay, this morning or this evening, I'm interested in the Aussie dollar and the Aussie yen, in this case short, and then Kiwi, right, dollar, and then so I'd have 4 potential trades, right? Odd yen short, okay, NZD yen short, Aussie dollar short, right? Kiwi dollar short. Remember, I haven't even looked at a chart yet. That's where I'd start. So I want you to digest that part. you might be running to your charts looking for a trade. You're always going to find something to trade. And that's the problem. You're shopping while you're hungry. Okay? It's like saving your money to buy something important in the future versus taking your paycheck and just buying stuff. You're at Walmart, you're like, oh, well, throw that in the cart. Oh, look at that. Throw that in the cart. Did you know that research has shown that the bigger the shopping cart at stores, the more people buy? That stuff just makes me mad because it's psychological. Like, they're like, this idiot is going to buy more crap they don't need simply if we make the shopping cart 5% bigger. And they're all laughing like at their customers. Like, I feel like I'm being manipulated, right? But we know what happens. You're like, oh, that's cheap, throw it in the cart. Oh, that's cheap, throw it in the cart. Oh, that's cheap, throw it in the cart. Versus like, I'm saving to buy something important. I'm saving for a down payment for a house. I'm saving for my annual vacation. Okay? It's a form of budgeting. So I don't like the idea of opening charts and looking for trades because it's just like, throw that in the cart. Oh, drop a lot, see what happens. That's not how you do this. So instead, again, being self-taught, I did this analysis first. So in this case, I would have come up with something like this where, for a while, Kiwi's been weak. Okay? Now it's been up for a day, which means in the next day or two, maybe it's going to be weak again. Cool. So maybe I want to look to sell Kiwi dollar. Okay? Because not only would it roll over in a channel like this, I'm looking at maybe a role reversal like that, right? So somewhere in the near future, there just might be another down. You see? Thinking ahead. I'm not even looking at a chart yet. Hey, if this trend continues, maybe I should look for some Kiwi dollar weakness. Great. Now, you look for the trades on a chart. Yeah, Brinsley says, after 5 years, you move into a new house and then you give all your crap away because you never need it. What you bought. Well, that's the thing. Like, the secret isn't to buy stuff. The secret to life, really, and our humanoid life our human life is very short. And by the time you figure it out, it's all too late, which is really sad. But if you own stuff, there's no return. Eventually, all of that depreciates, and usually pretty quickly. Okay? Now, like, for example, most t-shirts depreciate to zero pretty quickly. Although I own one of my t-shirts, just one of them, though, is from 1992, and I still wear it from time to time. It's just kind of cool. So that one, for some reason, has some weird, interesting value. It survived. But most stuff, okay, like I predict your air fryer is going to be in the trash can pretty soon. But I'm guilty. I bought an air fryer. But these things come and go, but they're not assets. That's the problem. So what we need to teach our children, for example, is stop buying stuff and start buying, instead, own assets. You don't buy an asset, you invest into an asset. And the definition of an asset is something that has a return on an investment. Maybe it provides some sort of cash flow or some other value. It grows, it doesn't depreciate, right? And so when you walk in, or if you walked into my house, you might say to yourself, these guys are poor. Wayne is poor. The house is empty. Like, it's empty. Oh, Wayne, I feel bad for you. You don't have any crap in your house. Yeah, I can't afford to buy crap because there's no return on investment. It's like burning a pile of cash. So, right? So I lived a simple, humble, impoverished life. I'm like a monk. Okay? When you meet someone who has a lot of money, let's say you have a cousin or a friend of your cousin's friend is a multimillionaire. Okay, most of the time, unless they won the lottery or something, most of the time you'll find out they don't have any cash. They don't have cash. Therefore, even if they have, let's say they have a net worth, like I'm not talking extremely rich, but let's say they have 10 million bucks. Now, most of that's going to be in their retirement account. If they have a net worth of $10 million, almost, I'd say half of that's in their retirement account, which they can't spend. It's a future cash flow, but they can't spend it now. So they have the money, but they can't spend it. And then let's say another third, let's say another quarter, okay, just to keep the math. So now we're at 75% of their net worth. A quarter of that 10 million is probably equity in their house, which they can't spend. Now, they might own a couple of cars. We'll call them assets. I mean, yes, they depreciate, but, you know, a 5-year-old Mercedes, you could still sell it and convert it back to cash. So there's still some value there. So they have some cars and all that kind of stuff. But then they also have IRAs, which are not necessarily retirement accounts. But they have other types, you know, so they have some stocks and they have some bonds and they have some crypto. And they own some gold and they own some cars, right? So they have cars there. They might, some of their assets might be a watch. So they got a watch. And all of a sudden what will happen is for them to go on a nice vacation, they've had to save. They're like, oh, well, next summer we want to go to Japan. So we'll start saving now. Take money out of the cash flow and put that aside, and we'll budget for that. And then we want to buy, so, you know, let's say upgrade our car, the 5-year-old Mercedes to a brand new Mercedes or something. Okay, well, put some money aside. What you'll find is like successful people or people that are successful with money are always dead broke. Planning ahead, which is a lot of like what we do as foreign exchange traders every day to kind of bring it back around. You can't just have like money in, money out, trade in, trade out. There should be a strategic plan. And then you're looking for good opportunities in the near future for your trading. So like if you decided, maybe not today, but maybe today, you're interested in selling the Kiwi. Notice this is on a 4-hour chart, so it might be next week's trade. It might be later in this week, but Kiwi has been strong, but you're like, okay, it has been strong, but it's going to be weak. You're not just reacting to its strength over the last 2 days. You're like, yeah, well, you expected that strength. It was 1 standard deviation below the mean. So you're like, now that we're back at the mean, maybe it'll rise as much as a standard deviation above the mean, but probably not, because you're thinking, well, you know, some sort of role reversal. So you're thinking, I don't know, today, tomorrow, the next day, whatever. You're going to look for opportunities to sell this Kiwi. Cool. That's thinking forward. Okay. On a 4-hour chart. Now, you don't see it on a 15 because it hasn't happened yet. So then you go to your Kiwi dollar scenario or setup, and you're like, okay, technical analysis, help me set up a Kiwi dollar short. Okay? And you might say, well, Wayne, I'll consider it sort of in this area where we are now, but you'd prefer this area. Cool. And you're thinking, plan A, or plan B. I'm willing and able. So I put my trade on the table. Okay. Cool. Too much soapbox? What do you think? That was too much, right? Too much. Wayne, too much. I preach to teach because some of you never had this. Okay. You know, the other thing I find with very, very successful people with a lot of money, they don't say things like, oh, I think I'll buy the new Bentley SUV. They're beautiful. $300K. And then they just like go get one. What I've seen is, and maybe it's just my version of what a successful person is, who knows? But what I've seen is they always tie these things to a goal. Very goal oriented. Self-made successful people, even if it's nothing, what they do is like, when this deal closes, I'll buy that for myself as a good job gift, a job well done gift. Now they can buy it today and it's no big deal. But they're like, yeah, but not until this deal closes and I bring in that $3 million commission or whatever. Like, let's say it's a real estate developer. They're like, not until I close on this deal. And and they set it all up, right? And they're like, when that happens, I'll go and reward myself for a job well done. But they tie it in, right? So they're like, you make a $3 million commission, so you go buy yourself a $300,000 car, and what do you do with the rest of the money? Well, you don't need it, so you invest that and save it. Okay? Well, yeah, Aaron, or they loan the car. Well, what I taught you guys, there was a time in the financial crisis, and I don't remember when it was, but I outlined everybody how you could lend Ford Motor money. Okay? Ford was paying for like a 3-year, this must have been during the financial crisis. Ford Motor Company would pay you, I think it was like 8, maybe even as high as 10% for a loan, a bond. Okay? But at the same time, you could buy a Ford F-150, which is the truck, the best-selling truck in America. You could buy a Ford F-150, no money down, 0% interest. And what I explained is you could borrow the 50 grand to buy your beautiful Ford F-150. Okay? You can borrow from Ford for free. So if you already had the 50K, okay, you would loan it to Ford, and you had this carry trade. So you take your 50K, lend it to Ford, they're going to pay you. Meanwhile, then you borrow the money back for free, and at the end of it, you basically get your truck, your Ford F-150 for free. So the 8% helps you cover your monthly costs, and then you get your $50,000 back later, and then you sell the truck Whatever. But it certainly made it cheaper. But it was weird because I can't remember. There was like another part of the puzzle at that time where it was weird. Like, was it that you could get two of them and then you sell one? And I don't know. But anyways, there was a time when you could do things like get the truck for free. And that's probably the other thing you'll find with very wealthy, successful people. They always find a way to get that stuff for free. Like if you buy a Lamborghini with your money, it's the dumbest thing you could do. But if your renters in your apartment building are paying for your Lamborghini, then it's great. It's a good idea. Let's go through the charts. Okay. Okay, check that out. That's the sell we came up with in the day trading group. Okay. Luftlit to your mum. See it? Oh, somewhere in there. I want to love you. Love and treat you right. Right? All right. Cool. Roll reversal. Second chance. Thank you, Jimmy. Okay. So, what you're looking at now is here and here. So there's like a trading band going on. And maybe the rest of the day is like this. Or it pops up and you know to be careful. That's like a warning. Okay. But again, up into the moving averages, sell on the open. Okay. Lower low, sell the retracement. Okay, we call that a roll reversal. Cool. So right now, very bearish. Very cool. Here, maybe a continuation. This is Monday's trade plan. Look how beautiful that was, huh? Look how beautiful that was. Down, hit the target, and it stopped. Now the idea is second wave. Okay. Watch this. Insert indicators, custom. Let's get ziggy with it. Okay. Zero lag moving average. We'll make it red. Make it fat. Make it a fatty. Okay. Input 21 EMA. So see, you're like, Wayne, we already have a 21 EMA. Yes, there it is now, but it's lagging, which means every single candle that's happening, it moves right and down, right and down, right and down, because we're in a downtrend. But what if we remove the lag? Zero lag. Let's see where the 21 EMA will be in the future. See, this one is actually moving. It will drop down if we get more red candles. So where will this candle be, or where will this line be, right, in the future? And we're there now. So what this is showing you is somebody sold here, see? Why did they sell there? Because this one is moving and in the future will be here. This is why if you look at your moving averages, you're like, why didn't I sell it off the moving average? Why do I not see it? Because it doesn't happen in real time. It happens late. So when you're going backwards, okay, when you're going backwards in time, for example, why didn't you buy it here? Because at that time, the moving average was way down here. Why didn't you sell this? Because at that time, it wasn't there. At that time, it wasn't there. It's there now. Okay, so anyways, I like leading indicators. For example, this says, remember that was a target. This says stop selling. Okay, that's a leading indicator. Okay. Camilo says the red ribbon hugs the price action. Sure. In fact, speaking about ribbons, how about this one? I wanna love you. Right? It's actually, I wanna sell you and trade you right. Okay, how about that? See, I like it. What it's showing you is the rollover from bullish to bearishness. And you can see in many ways, kicking off, okay, kicking off like that. But the missing piece to this puzzle, of course, is this doesn't tell you in advance that that is a place in which the falling market will very likely stop falling. So you can have as many moving averages as you want. It'll always be lagging. Therefore, very often people are like, Wayne, you have too many lines on your chart. And I'm like, well, one of the reasons is I do want to look backwards to see what has been happening to try to predict the future. But then also, right, leading indicators I find are very helpful to also try to predict the future, not based on what has been happening, but based on what might happen. Not what has been happening, but changes, potential changes in the market. Okay? So this is like, so yesterday's trade plan was sell it down to this area, okay? And then be prepared to get out. And then, of course, it went up. Sweet. Now, the lagging moving averages now are saying, well, at some point, this market is likely to want to continue back down. So is it off this area? Is it off of this area? Is it off of this area? Is it off of this area? Or is it off of here? Well, that's for you to decide. I think this chart's pretty. So one thing to kind of digest about how the market moves and how the market behaves. So look at this. Doesn't it seem like we come back to that white line a lot and reset, 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 reset? No matter how extreme we get, it comes back. Extreme, comes back. Extreme, comes back. Okay? Up, 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 up. Extreme, comes back. Now we're way down here. What is the chance that in the future we find ourselves back here? That's the thought process. That you can't always, like, where do, let's say not you, of course not you, but where do most retail traders lose most of their money? Buying it up here, buying it up here, buying it up here, buying it up here, selling it down there. So maybe you get more serious as a trader, not at the extreme highs and lows because the trade has already happened. Maybe you get more involved here. Because in the white circles now, you had a 50-50 chance of being right. You filter that out with your bias. Okay? Okay? You filter that out with your bias, you could probably get that to be 60-40. You're more 60% of the time you get it right. Now, the interesting thing is when you get it wrong, I'll just pick on numbers. When you get it wrong, you lose 33. Okay? When you get it right, let's say bare minimum, your trades are worth 99 pips. But you're only 60% of the time you get this. Dude, you are freaking unbelievably successful. If you get it down to 40% of your trades are losses, but your winners are 3 times bigger, dude, you have yourself a successful business. Not just a Forex business or not just a trading business, but a business. You have a skill. You build things. You're a builder and creator of value. Some people dig holes and put in fence poles. Other people build tables out of wood and nails. Okay? You create value in a different way. Okay? What do you think? Was that, again, too much? You just want me to tell you what to do? How am I doing? Click the like button if I'm doing all right. Okay. Do I need to tell you to sell it on the hourly 21? Thank you, Daniel. Yeah, most people just want me to tell them what to do. Okay, cool. Well, when you hit resistance, sell it. If you're a bear. All right. I'm a bear on this one, and I don't like it yet. So it'd be very interesting to see what happens next. Will there be a rollover? I don't know. But if there is, then I might have an opportunity maybe next week. Could be a rabbit, could be. Right now, it still looks like more up than down. And I'm looking for down, so I'm not doing much of anything on it right now. Now, you can see what I created. By the way, I did this on Sunday. When we were up here on Sunday, I said, well, if it comes down, and I picked a price, not a random price, but I picked just a logical price to say, if you're a bull, right, you believe there's risk off in the stock market. And by the way, I did say Monday and Tuesday would be down days. Okay. And maybe by the end of the week, we would have up days, not like crazy up days, but less down days in the stock market. So like Monday and Tuesday, the dollar, would be strong. And then I on Sunday, I showed everybody that iron ore prices are down, oil prices are down, gold prices are down, copper prices are down. We went through a lot of things, and so CAD would be negative, but I want to buy CAD, but I understand that it's negative. So anyways, I created a really basic strategic plan of down and up off of the pivot. But then I also have this, which could lead to a down to that price and then up. And then, of course, creeping along in the past. So on Sunday, the 21 EMA would have been here. And what ended up happening is it finally caught up and it kicked off there. Okay? Because, it could be a roll reversal. It could be a pivot point, or it could be an EMA. It's all the kind of just different versions of the same thing. It could be a Fibonacci retracement. Okay? It could be a daily pivot. Like, dude, the thing is, I don't care what it is to you. The most important part of all of this is you're thinking up and you have a higher high and you're like, I'm going to buy a higher low. Now your stop's probably at break even and you're done. Okay? Okay? And now we'll see what happens. Will it make a higher high? I don't know. Okay? But okay, you can catch that. It's not a hard trade. It's not a difficult trade. You got that. You can do that. Take a look at yen yen. Yen yen. Oh, I'm almost on my target. Look at this. What's my target? 300. Dude, I'm up 300 pips on this now. Holy crap. I guess I'll move my stop to break even since I'm up 300 pips. Holy crap. Seriously? I shorted at 165 and we're at 161. Yeah, holy crap. Cool, man. Cool beans. Yeah, that's how you do it. See? That's how you do it. Yeah. Yeah. It's not even a good trade, actually. This is a pissy little scalp I did Sunday night during Asia. We were right here, Sunday night in Asia. I was watching yields on the JGB. Okay? Yeah, seriously. I had just finished the day trading group, so I'm a little late on this trade. But we were looking at 10-year JGB yields, and I was also listening to the news, and there was this idea. Well, first of all, JGB yields were like 248 or something. So I'm like, oh, I'm buying the yen. And then the news came out of more COVID deaths and likely a bigger crackdown potentially in Beijing, not just Shanghai. And I'm like, oh yeah, buy the yen. Cool. Okay. So this would be like the ultimate trade, but then again, really, would you sell into that moving that 4-hour 21? No, probably not. Okay. The better trade I could have got maybe Sunday was this bearish engulfing, catch the pullback, but well, I didn't have those in the cards. So it was just a pissy little scalp on Sunday. Pastor Baker says, hey, thanks for breaking that down last night in class, Wayne. Really helped out with the yields. Have a better understanding now. Cool. Hey, my pleasure. Okay. So that's a good one. Nice. Okay. So it looks like actually I've been taken out of quite a few of my trades. I guess yeah, good, right. Interesting. Taking down the stack. Cool. Back in there. That's interesting. I'm just looking. It's all the same. Only the names will change every day. Cool. Good. Look. Yeah, nice. I hit targets. Cool. Now, I got taken out of a big trade last night. I got taken out of this trade. How many people remember this trade? I sold. You're like, too many lines, Wayne. All right, let's just do it simple. Let's change this. I want to love you and treat you right. All right. All right. Just, I sold here. Okay. The ultimate bottom was here. Then a double bottom. Okay. Then it made a higher high. And then it dropped back down to here. And then I moved my stop somewhere like this or whatever. Okay. Because the next likelihood is this. Now, one of the things I didn't talk much about this, because this was an example trade, but a big part of that trade had to do with seasonality. And really seasonality says take your profit here. So if I was sort of more, if I was just trading for money's sake, okay, then that double bottom or the failure to make a lower low, let's say, maybe the higher high, maybe in here I should have taken profit. But that wasn't the point. And this was the retest of 20. But that wasn't the point of, this is my coaching account, right? Okay. So it was, I asked people when we were way up here, should I hold it till the end of the year? And a whole bunch of people are like, hold it till the end of the year. And I'm thinking, well, yes, it makes sense this way, but not seasonally. Mexican peso tends not to be strong all year. It tends to be strong certain times of the year. Why? I don't know why. Who cares why? Just is. Okay. All right. So we had that learning experience. And I announced last night that I had moved my stop. And then I explained why and all that kind of stuff. Now, in the period of here to here, okay, on one standard lot, okay, I earned just shy of $600 in interest payments. And it was, okay, the beginning of March to the middle, so about 6 weeks, about 45 days. In approximately 45 days, I earned $600 in interest payments. How nice is that? Okay. Okay. Have you calculated what that is? Hang on. We'll just do it simple. Okay. So I collected $600 but I had to invest $3,000 to take the position on one standard lot. Boom. In 45 days, I earned 20% return on investment. Holy schnicker-schnocker. In a world of nearly 0% interest rates, now interest rates are going up, but dude, in 45 days, I earned 20% return on investment in interest-only payments. Holy smokes. Not 2%, 20%. Can I get an applause for that? Now, of course, if you did one mini, you would have earned $60, but you only put in 300, so you still would have earned 20%. You see? This is leveraged finance. I lent the good people of Mexico money. Now, that is beautiful, don't you stink? Now, here's the other thing, though. I earned, in pips now, $5,400. Okay? For a whop, that's why I jammed it at exactly that price, for a total of $6,000. And like I said, $6,000 on a $3,000 investment. So I earned 200% total internal rate of return in 45 days. And we set it up all in advance. We talked about it on the way up. We talked about when I did it. We talked about after I did it. We talked about all that kind of stuff. Now, I should have done better, but that was part of the discussion. I wanted people to make decisions down here. Will it fall further? And what were the components of it? Well, technically, this should have been an interesting place. Okay? The failure to make the lower low, the failure to stay under 20, I could have had a higher return on investment. Okay? Maybe squeezed out another $1,000. Instead of 6,000, I should have had 7,000. But the thing is, who cares? The biggest thing is that we set all of this up in advance and we wrote it out together as a team. And now, last night, I made the decision to go ahead and kill it. But that's how you do it. Okay? Cool. Okay? Cool. Oh! Oh my God, look how close. That's 333 pips. Look at that, dude. Look at that. Holy smokes, eh? You're going to get... Wow, look how close that is, huh? Oh, yeah, don't I have my own applause? I don't have my own applause. I thought I had applause. Control A? Control Alt A? Alt A? Oh, I don't have applause sounds. Control F for fire. I got fire. Control alarm. Illuminati? Oh, there's just no sound. I don't have sound. Maybe that's what it is. I don't know if you heard the applause. For some reason, I don't have sound. All right, look at that. Holy smokes. That's more than I expected this morning. Holy smokes, huh? Dude, yens are on fire. Amazing. Oh, look at that. I actually hit. It hit the take profit, but it didn't cover the spread. Amazing, huh? Uh-oh. Oh, you did hear it? All right, cool. Well, I'm getting hot. It's getting hot in here, so take off all your clothes. Yeah. This boy is on fire. All right, cool. Well, whatever. Give me my money. So I don't think I have any trades open. I got all taken out. Yeah. Give me my money. Boom. All right. Now I got work to do. I got no trades on. No trades on this account. That's that. Now I got to go do some work. That's the worst part about taking profit is you just got to get back in and do it all over again. All right. So that's that. I don't know what else. I mean, we got the stock market coming. You know what? Why don't we do this? I'm going to throw down an ad for YouTube's sake, and then we'll do Bitcoin, gold, and oil. How does that stink? Smell like a plan? I will do. All right. Okay, let's do my WTI. 95 was the number, and the number was 95. Makes sense to me. We've got to start climbing here. Okay. So the thing is, are you going to start skip scalping it back up? Okay, you're like, what do you mean skip scalping it up? That was what we planned 2 days ago. Oh my God. Yeah, that's what we planned 2 days ago. Okay? This is a great example of, are you shopping while you're hungry? Okay? Which means you're basically chasing price. Or are you setting things up 2, 3, 4 days in advance? Going, oh, well, when we're down here, then maybe, and then you start creating if-then statements. And, you know, does oil go up from here? Well, you'd need some game on rally, but hey, man. Yeah, the funny thing, Gary, is Google will not allow Forex trading firms to advertise because they consider Forex a scam. But then they allow all these scam artists to like advertise. This is just as long as it's not Forex, which is like, just it drives me batty. The National Futures Association also has different rules than the SEC, the Securities and Exchange Commission. So once again, the idea, the NFA will not allow Forex and futures firms and service providers to advertise. But then I used to get the Investor Business Daily newspaper, and there were entire full-page ads that would say, buy this video course and you'll make millions. And here's all these testimonials. I bought it and instantly made lots of money. Well, I bought the DVDs and doubled my retirement account. I bought the DVD course and bought my mom a house. And I'm like, holy crap. It was nuts. Like, it was in your face, hardcore advertising. And of course, that's okay if it's stocks. So they're like, yeah, it's how to trade stocks. And don't you love your mother, don't you? Well, if you just paid $199 for the video training courses, you would be able to buy your mother a house. I'm like, oh my God. And then in Forex, you can't advertise at all. You can't, not even anything. And I'm like, wow, just it's so weird to have different rules, right? But whatever, just weird and strange. So I can't advertise, but people can advertise on top of my stream, which is interesting. And they're probably, like you said, pitching something get rich quick, but then I can't advertise and say, don't buy a get rich quick thing. It's just funny, right? So whatever. So my point here is you must decide over the next couple of days whether you want to skippy scalp oily up. Okay. You want to decide whether this is your gig the next couple of days. And for that, you'll need BTC up. For that, you'll need, SP 500 up. And you'll probably want USD down. Probably. Okay. Okay. You know what I'm talking about? But you're saying it was an FX advert, which is really strange. Okay. So yeah, so that's cool. That's a risk on thing that would provide some short-term, like, for example, if you're planning out May, you might be thinking this as a May base. Okay. And you'll need to get some sort of up, probably a down, probably an up, and then get challenged here, down, and then up. Is that what you think for May? And then you're like, well, Wayne, I have no idea. Well, then you're not likely to be a good trader. You can't even make that decision. Okay. Now you might say, well, Wayne, I see this as a lower low. Okay. So if I were me, Wayne, I would look for a lower high and sell down in here. Good. Great. That's how you do it. Now, we don't know if you're right, but the thing is, I want you to have that decision made. That's next week, yo. Make the decision now. And now, what can we learn from Bitcoin? Okay. In the medium term, okay, in the medium term, this has been down. In the short term, you need to make a decision. Will it continue down and break the upward slope that we've developed on the longer term? So the medium term is down. Longer term is slightly up. Now, on the short term, are you thinking this? If the pink is what's going to happen, your WTI is likely to go up. The stock market, the S&P 500 is likely to go up. Oh. So what do you think? So right now, the decision is that or that. Which one's right? Well, you can't do both. Or you're not likely to do both. Okay? So you pick a team. One or the other. And you do one of these beautifully. Okay? I'm thinking about going clay shooting. Now, if you ever gone clay shooting, you're standing there with a shotgun. And there's this one that I remember where they fire a clay over your head, so you can't see it coming, but it goes over you. And at the same time, they fire one from the side, left to right. So there's one going from behind forward. So it's going away from you, slowing down as it's going, and falling, but also going farther away. Meanwhile, there's another one going right to left, and again coming down and slowing down, and but they're going different directions at different speeds and all this kind of stuff. And you can only fire one shot at a time. It's a shotgun. You can't shoot both clays. So you have to decide fairly quickly which one you're going to shoot first. And you should also commit. If you miss your first shot, what do you do? Go to the other clay or stay with the one you're on? And I'd say pick one, aim, and make sure you hit it. You don't want to miss both. Commit to one, hit it, and make the first shot count. Okay? Give it a half a second longer and hit it. Do it right. Same thing with this. Make a commitment to which one you're preparing for. And trade it well. Trade it right. Make it count. Okay? Make it count. So the stock market is opening in about 10 minutes. We're in the midst of earnings season, so there's lots of volatility. Right now, the world feels good that Elon has successfully bought Twitter. Other than that, nothing's changed. So I guess I'll go back to doing what I've been doing, and it's just everything that the swing trading group and the day trading group has been talking about. We're just following current trends. We're thinking about future trends. I'm actually very happy with the Japanese yen strength right now. Okay. Does anyone remember me saying that in January, the Japanese yen should be strong? So I'm quick to drink that Kool-Aid. I also understand the challenge of this market based on JGBYCC. Okay? If you don't know what this means, let's do it this way. If you don't know what this means, BOJJGBYCC. If you don't know what that means, you are missing a very large component of what's actually happening right now. Jim says the 10-year JGB is at 2.41. And I just got knocked out of a bunch of Japanese yen short trades, meaning yen pairs were short, which means since Sunday, I bought a crazy amount of Japanese yen, and based on the assumption of that occurring, or at least partially, but that being part of it. So on Sunday and even on Thursday of last week, it was very clear that we need to be aware of BOJJGBYCC, what it means, how long it'll last, but what to look for. Okay? And if this ain't happening, see, this creates Japanese yen weakness. And so you very simply look at the market and you're like, oh, buy Japanese yen. If BOJJGBYCC is occurring, then you're like, oh, sell Japanese yen. Cool. Nice. And if you don't know, here's the thing. If you log into FX Bootcamp, once again, if you're not currently a member, it's $88 a year. $88 a year. Just log in. I added a little section. And you can go through. It's an hour-and-a-half video right now. It was a 3-hour meeting. Okay? But the recording's an hour and a half because there's group work that traders do with each other, which doesn't get recorded. That's private. It's conversation and debate amongst each other, which is private. But in that hour-and-a-half video, I very clearly articulate exactly what we're talking about and why it's occurring and how it's different. And we even come up with a model for what's occurring now relative to what happened a couple of decades ago. We actually have a model for this. What do I mean by this? 2022. We have a model. Part of that model says the Japanese yen is going to get strong for thousands and thousands of pips. Oh, well, that's a nice model to have. Okay. And by the way, when we discussed that model on Thursday, Japanese yen was weak. Now it's ridiculously strong. So I'm assuming many of us have bought it and have done well. So all I'm saying now is for the lousy $88, if you're not already a member, You can log in, watch the 65 hours worth of training videos, but now it's, with that video, now it's 66 and a half hours. Maybe it's worth it, man. Take a look. Okay. Now, you know you're going to get suckered in, right? Because you're going to watch it and you're going to want to join the swing trading group. And that's why I did it. I'm going to sucker you in. You're going to say, this is so unbelievably powerful. I got to be involved. Yeah, I know. That's my trick. Making the shopping cart big, baby. I'll leave you to it. Peace on earth. May the pips be with you. May our profits be above average. Go get them, eh? The world is your oyster. Make it happen. Get her done.